It's not good to be obsessed all the time, but I understand that when it crosses 50, things get a little bit intense. There is a lot of stuff being said about backwardation, silver and backwardation. I'm here to clarify what exactly that means. And my take is, and I will show you this with the evidence, that silver is not currently in backwardation. There is backwardation between London and New York prices. There is backwardation, therefore, in the spot market, which is London, and the futures prices, which is in New York. But that is not exactly uncommon. I'll show you the graphs why it's not uncommon. It's actually pretty common. It's extreme right now because of a certain situation in London versus a different situation in New York.
In today's news recap, high inflows into gold ETFs, especially in North America. Commerzbank. According to the World Gold Council, record inflows were recorded in September. Undoubtedly, the high nominal figures are also due to record prices, but with net inflows of over 145 tons, September was still the 11th strongest month since ETFs were launched in spring 2004, i.e., in over 250 months. Strong buying interest is particularly evident in North America, where the weak U.S. dollar may play a role. The U.S. accounted for just under 90 tons, representing over 60% of purchases. Inflows in Europe were less than half that amount. Gold ETF holdings stood at just under 3,840 tons at the end of September, which is still just under 70 tons short of the peak in October 2020. In U.S. dollars, holdings are already almost twice as high as the 2020 high, which incidentally had already been reached in US dollars in July 2020. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Straightforward. First of all, the people that are saying that there's backwardation in the silver market, they are right that there is heavy interest in spot right now. This is the CME table for silver futures that start in October. Technically, October is spot because it's delivery for immediate delivery. Immediate delivery October. If you buy an October contract, you can get delivery immediately depending on what number is called if you own the contract. But you can see here that this is from yesterday, October 9th, which was my birthday, by the way. So silver hit $50 on my birthday. Happy birthday to me. Woohoo. And we have here October 2025. 1,344 contracts were added to the open interest here, whereas 1,471 were taken away, were removed from the open interest, were closed out in December. So there is a shrinkage of open interest in the futures contract for December, which is the currently active futures contract, and an increase of almost the same amount in the October spot contract. So yes, there is heavy interest in the October spot contract in New York, but still, that does not mean there's backwardation. But you can also see here that there is heavy physical interest in deliveries in the October contract. You can see here that 1,427 deliveries were made on October 9th. That is more than any other day this month, excluding first notice day, which was September 29th, when we had 2,233. This isn't an active silver contract. This is only, and it's not a front month meaning, but there is, yes, they're right, that there is heavy interest in physical delivery for the spot contract in New York. But while we see that silver is back over 50, we hit 50 over here to an all-time high of 51 something. This is the London spot contract. This is not New York. And we here hit 51 again. And now we fell back to 48.40. And now we're back over 50. Things are getting really, really volatile because the monetary system is being torn apart at the seams. But what is going on? It's when we're talking about backwardation in terms of New York minus London, and if it's negative, it's not exactly rare. You can see here, if we look at this bottom graph in the gold charts or us graph here of the near month minus the spot. Spot means London, near month means near month in New York. You can see here that very often it's below zero. So technically, as they are counting this as backwardation, technically you could call it that. But it happens very often. It's almost a mirror image. It's not rare. And it's happening again. You have a -2 spread between the London, which is more expensive, and the New York, which is cheaper. So you're saying, oh, spot is more expensive than futures. Okay, fine, but not a big deal. So what is causing this? And you can see here when we zoom in just for the last 5 years, you can see this happens not all the time, right? And this is pretty extreme. It is extreme. This is not nothing, but it's still not backwardation. You can see the last time this happened was in 2023. It happened in 2024 also, and now it's happening now at the same extent as 2023. That spot silver in London is more expensive than the nearest future in New York. It happens, but it's not rare. So, why is this happening? Well, very simple explanation for that. Why is London spot more expensive than New York futures? It's because the supply in New York is extremely high and it's coming from London and other places. So you see here that the supply of eligible silver, this is eligible silver, it's not for sale, but it is in storage. It's at an all-time high of 339.61 million ounces. And you have the registered silver, which is also right near an all-time high. The all-time high was 200 million ounces. Now it's 186 million ounces. This is all-time high of both eligible and registered silver for sale in New York. So the supplies of silver in New York are very, very high.
In today's news recap, festive buying props up demand in India, China muted in post-holiday trade. Physical gold demand in India held firm this week despite a record-breaking price rally as jewelers and investors snapped up bullion ahead of key festivals later this month, while buying in China was subdued in post-holiday trade due to higher rates. In Hong Kong, residents rushed to sell everything from gold bars to rings to cash in on the record price rally. Spot gold prices rose above $4,000 per ounce for the first time on Wednesday as broader geopolitical and economic uncertainty and U.S. rate cut expectations boosted bullion demand. Indians will celebrate Dhanteras and Diwali this month, festivals during which buying gold is considered auspicious and which are the busiest bullion buying days in the country. Investment demand is really strong right now, expecting prices to rise further. Investors didn't mind paying extra, even over record high prices, said a Mumbai-based bullion dealer with a private bank. People are investing in gold bars and coins as safe havens, but jewelry demand has been low. People are looking to buy, but they are waiting for prices to come down, said Peter Fung, head of dealing at Wing Fung Precious Metals. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
Causing the shortage in London. You can see here the number here is 790 million ounces is the total. This is not the float. And a lot of that is owned by SLV ETF and other ETFs that the silver sits there in London. And you can see last year the float was higher. It was above 800 million ounces because this is thousands of ounces. It was above 800 million ounces and now it's below 800 million ounces. And the ETFs, even though they haven't come anywhere close to where they were in terms of silver storage during silver squeeze, they are higher than they were last year. So you have a severe shortage of silver specifically in London, which is why the spot price is more expensive in London and cheaper in New York. But this is not backwardation. What is backwardation? You see here, this is a contango chart. These are silver prices just strictly in New York. October is here, and it's at 46. This is from yesterday, 2 days ago, so the prices are a little bit off. But you can see here it goes to $52 from July 2030, and this is the cash price in London over here. So you can see this is a contango chart. What would backwardation look like? It would look like this. I just took the chart and I flipped it. You can see this is why the letters are backwards. But if everything was the same here and this is what the chart looked like, and forget about this cash bar, this would be backwardation. We are not there yet, but this sometimes happens in the oil market. It sometimes happens in the gasoline market. It sometimes happens in wheat. Very rarely does it ever happen in silver. When it does, that'll be the end game. We're not there yet. In a table, this is what it would look like backwardation. This is a settlement price. This is what I put the black rectangle around. So you can see the settlement price for October silver, November silver, December silver. Settlement price simply means that it's a volume weighted price, and these need to be calculated because it helps the CME calculate how much margin a client needs to have in his account to maintain his position, and that is based on a settlement price. It's volume weighted, so if most of the volume is around, let's say, 47 and some volume and a little bit of volume is around 42, 43, I'm just giving an example, then the volume weighted average of the price for that day's settlement would be whatever this is. And this price is going up as the expiration gets older and older. Sorry, newer and new, whatever, into the future, more into the future and more into the future. You can see here 50, 46.85, it gets higher, 46.97, 47.15, 47.36. It gets higher as we go into the future. That is contango, not backwardation. When this flips, we'll be in silver backwardation, and that would be a sign of near endgame. So here we have a chart from Monetary Metals from Keith Weiner. He is the expert in gold and silver backwardation. His entire thesis is that permanent gold backwardation, which will also be permanent silver backwardation, will be the end of the monetary system. So that means by these charts, the co-basis. The co-basis is the amount of money you get to disgorge silver, which means that is in backwardation. You should get money to hoard silver, which means there is an excess of silver. But if you get money to disgorge silver, that means there's a silver shortage. And we can see here that this red line, it's not above zero yet. It's going higher. It's getting closer to backwardation, but it's still below the 0% mark over here. So when this red line goes above zero, that is a silver shortage. That is silver backwardation. It happened in 1998. I think this was the Asian financial crisis or something. It happened in 2003. It happened very briefly in 2011 during the silver spike, but it has not happened yet. Now, it should be monitored, but the silver co-basis is still negative, which means you still get money to hoard silver and not disgorge it.
What do you think of Salente's take? Will gold continue to rise in the fourth quarter of 2025 and beyond? Are we approaching a major top in the global markets? Post in the comment section down below your honest opinion. Subscribe if you have not yet done so. And check this video right here because it's a perfect fit for you, and I'll see you on the other side. Thanks for watching.